Hi, I'm Steve LaFrance, and we're now 3/4 of the way through 2025. U.S. equities set all-time highs 1 out of every 3 days this quarter, with the S&P up 3.6% for the month and 14.6% year-to-date. The Russell 2000, representing small caps, delivered a 3.2% total return for the month, continuing the small cap rebound that began over the summer. International stocks also continued its run. Developed markets gained 2.1%, while emerging markets gained 7.1%, putting both categories over 25% for the year. As expected, the Fed cut rates by 25 basis points on September 17th to a 4.0 to 4.25% range, the first reduction in 9 months, while taking a cautious tone. Chair Powell reiterated the Fed's data-dependent approach, and future markets now show a lower probability of another cut this year. The Fed's challenge remains the same: support growth without reigniting inflation. And inflation remains elevated at around 3%, with a modest month-over-month change of 0.35%. This stability is encouraging, but it's the small uptrend that's keeping policymakers on alert. Labor markets continued to show signs of strain, with unemployment rising to 4.3%, its highest level since 2021, and job growth slowing. The September ADP report showed that private sector payrolls contracted by 32,000 jobs, their first decline since early 2023, adding pressure on the Fed's balancing act between easing rates and maintaining stability. AI continues to drive market leadership, with mega-cap tech firms benefiting from strong demand for infrastructure, chips, and enterprise adoption. While the market cap weighting within the S&P is at a record level and valuations are elevated, productivity gains and earnings momentum remain a key support for the sector. And yes, the government shutdown is back in the headlines. We are several days in as of this video, but history shows markets tend to look past short-term disruptions. In fact, during the last 20 shutdowns, the S&P 500 was positive in nearly every case. While it may cause temporary noise, it rarely alters long-term fundamentals. As we head into Q4, investors face a mix of crosscurrents: cooling labor markets, sticky inflation, and policy uncertainty. But moments like these are why we stay grounded in process. Staying patient and purposeful is what turns noise into progress. So thanks again for your trust and confidence.